Hey everybody, welcome back to the Mentor Nation podcast. One of these days, I definitely need to do a bloopers or a behind the scenes. I literally just recorded this entire intro and did not have my mic in front of my face. And so the audio was absolutely terrible. And it was a home run intro too. So I have to redo it, but that's okay. So thank you for being here. If you've been here before, or if this is your first time, I want to welcome you and say thank you for being here. I have a great guest today that's going to talk a lot about real estate investing, where you can earn passive income even if you don't want to manage a property or you don't have a lot of money. It's a great episode. But before I bring her on, if you could just do me a favor, hit that subscribe button so that you get notified every time I release a new episode, which is typically every single week. So today I have a very special guest that's going to talk about a unique way to invest in real estate for as little as $1,000, and you can earn passive income without the hassle of managing any property yourself. Heather Dreves is the Director of Funding for Secured Investment Corporation. It's a company that invests in a wide range of real estate notes and projects, and they've built just a strong reputation over the years where investors have seen an average ROI of between 9 and 14% annually on their money. If you don't know what that means, that's incredible. That's a great return on investment. It's way better than you could get in almost any kind of bank or CD or anything like that. And so in this episode, Heather shares a lot about her company, why the barrier to entry for real estate has gotten so much easier for average people, and how you can take advantage of earning a passive income without the headache of dealing with the day-to-day or dealing with the property itself. You're going to love it. You're going to learn a lot. So sit back, take some notes, and enjoy the interview. All right, Heather, welcome to the Mentor Nation podcast. I am so excited to have you on today, and I want to thank you for being here.
Yeah, thank you for having me. I'm excited to be here.
Thank you. Obviously, if you're watching this interview, that view is a real view from Heather's office, which is absolutely incredible up near the Spokane, Washington area. But I'm really excited to have you on today because, as you know, and everybody knows, real estate is on fire everywhere. I mean, it's blowing up, but for the average investor, kind of like myself, it's becoming harder. It's harder to find good deals. It's harder to get financing. It's harder to research markets because I'm in Nashville. So this market is absolute insanity. So, naturally I want to research markets outside of my own, and it's getting, a little harder to do that. And your company and what you do solves a lot of those problems for people. And I'd love to deep dive into that. But first, I'd just love to hear a little bit about your story and how you got involved doing what you're doing, if you don't mind.
Absolutely. Well, my path to real estate investing was kind of interesting. I mean, I grew up around it. My parents were active real estate investors and grew wealth through buying real estate in addition to their day job. So I saw the opportunity, wasn't 100% sure how to get involved with it. Went to college to be a teacher, which is interesting. My kids can attest to the fact that I probably would have been the worst teacher ever because I have zero patience, but decided that, I had a knack for sales and knew somebody that was in the private money industry, but wasn't really sure what private money was, like I said, familiar with real estate and opportunities there, but not familiar with the opportunities in the private money industry, whether you were an active real estate investor or someone looking to passively invest. And so I actually had a friend that was in it, and my kids were in elementary school and decided to go back into the workforce. And he said, come to work with me. And so kind of fell into it by chance, and then realized like my eyes were just open to it. Like, number one, my husband and I are active real estate investors, and the opportunity for funding outside of your traditional bank sources was mind blowing. And two, the ability to passively invest and create generational wealth, through, things like self-directed IRAs and, passively just investing in real estate funds and notes was also very intriguing. And so that was kind of my segue into it. And then found that I just really enjoyed working with our clients and helping them create wealth for themselves. Saw the these people that had saved all this money, their whole working lives, and now they were starting to travel and enjoy time together and not really tap into their capital, but actually live off their earnings. And I was like, this is fascinating. And they were all doing this through real estate. And so
Yeah.
I feel like I got kind of addicted. And I was on a podcast the other day, and I mentioned that I went to school to be a teacher, and she goes, "But you are an educator. You educate people now
That's right.
about a pathway." And it was like this light bulb went off, and I said, I never thought of it that way, but that's really what we do here is, we educate active and passive real estate investors, and there's, many different paths you can take, but to really have a passion for it. And now I'm an active real estate investor, and, I've tried fixing and flipping. We currently are more focusing, my husband and I, on our rental portfolio, but just, am thankful that I was exposed to it, because I had no idea 20 years ago that this world was out there.
Absolutely. And it's so, you said it just a minute ago, and it blows my mind, the mindset that so many people have. Like, their mindset is like, build this nest egg up, and then when you retire, deplete the entire nest egg. It's just like, why do that? Like,
I know.
deploy that money into an asset and live off the cash flow that the asset generates, and never even touch the capital. And
Right.
but you see all these articles on Yahoo, and it's just like, how much money do you need to retire? It's just like, why even think that way? Like,
How much cash flow do you need to retire is more my
Yes.
mindset.
Exactly. And so your company, Secured Investment Corp,
Mhm.
I was looking at your website, and you guys offer some really incredible things. And I would love to just take a few minutes and go through those. And then I'm going to ask you questions about just real estate in general, because it's getting a
Sure.
little tricky out there. And for
Yeah.
somebody like you that pays attention to it all day, every day, I would love some of your insights for my
Absolutely.
own selfish reason. No, just kidding. I'm kidding. But I was looking, and you have 3 opportunities where anybody can actually invest passively,
Mhm.
whether you're an accredited investor or just a newbie. So can you just talk a little bit about, those 3 paths that you
Yeah.
offer for people?
Yeah, absolutely. And again, this is more geared towards the passive investors. We have a lot of opportunities within our company if you're an active real estate investor and you're needing funding. So that's obviously a conversation we could have offline. But I focus mostly around the passive investing side of it. And to kind of give you a little bit of background, I came on board with Secured Investment Corp 10 years ago.
Mm-hmm.
And at the time, we were a private money lender. So we provide funding to real estate investors that are purchasing or refinancing investment properties. And I joke that I dialed for dollars. So my job was, okay, deals out of underwriting. I call it my Rolodex, and all the young people here are like, what is a Rolodex? It kind of dates me. But basically, I would get into my database of all my clients, and they all want something different. And I'd start dialing. Hey, I got a deal out of, Nashville. Are you interested in funding it? Here's the specifics on it. So we essentially, what we did was we sold notes. So and when you buy a note, which is still an opportunity that you can participate with us, you're essentially buying the lien against the property. And I would tell you that my clients that buy notes that are very active in note buying are probably my more active investors, meaning
Sure.
they like to look at the deals. I've got these guys that are retired, and, they've worked their whole lives in corporate, and now they've kind of replaced their day-to-day time with looking at due diligence packages. Or my client that's really specific. Hey, I only want to invest in deals out of Texas, or
Sure.
I only want to invest in deals that are single family. So those types of clients are typically just really specific.
Yep.
And the upside is when you buy a lien, you're buying a lien against a property with at least a 30% equity position in it. And that's typically the really attractive thing. The borrower that buys the note gets paid on a monthly basis. So when the borrower makes their payment, the investor gets paid their interest payments. So they get paid monthly interest payments. And then the borrowers pay off a balloon at the end of the term of the note. These are very short-term notes. Average note is 12 months. So again, they're short-term loans with at least a 30% equity secured by a first lien against a property. So again, that profile of that type of client that buys notes is just really active. They're also probably a little more risk adverse, because the reality is, if a borrower doesn't make their payments, as the investor and the lien holder, you have to be prepared to say, Okay, I want to foreclose. They're not making their payments. They're not calling us back. Um,
Right.
that also segues into that type of investor that says, okay, with 30% equity, I'm fine taking it back. I have zero problems doing that. So I do think it takes a pretty unique investor. So those are the notes. What we found, that was a really clunky process because on one side of the transaction, we have a borrower that's anxious to close, working with a, purchase and sale that may potentially expire. And I'm trying to coordinate, this guy bringing money in to fund the deal. A lot of our clients use self-directed IRAs, which we're big proponents of, but they take time. You got to get your money from your custodian, get it sent. So what we discovered through that for the first 12 months was like, this works, but it's very stressful for everybody. And so we started exploring real estate funds, much like a REIT. But we knew that we didn't want to be a publicly traded real estate fund. We wanted to privately manage it. We wanted to control everything. And so we opened our first fund. For those of you that are familiar with funds back in the day, really your only option was to open a 506c fund, which only allowed high net worth accredited investors into it.
Yep.
And so we did that and it was great. And we only wrote it as a 5-year fund, realizing we needed to wind it down. So this is our accredited investor fund. And so we had to open up a second fund quickly to transition those people into it. So what we do with our funds, and I don't want to get too far in the weeds and, muddy the waters, but we originate all of our loans on these funds. So now we can close quick for our borrower. We can take care of those clients. Now I can work with my active investors that like to buy notes, give them the time to do their due diligence, make a decision if they want to move forward. But I also can service my really passive investors that like notes, and they like the fact that our funds are secured by residential real estate assets, but they don't want to get in the weeds with notes. They want to travel and all they want to do is see their quarterly earnings and they don't want the headaches of it. So what it did for us is give us the ability to really service anybody. And you mentioned that real estate's getting hard now. The deals aren't as great as they were, unless you have a big amount of capital, it's hard to compete when you're out trying to buy deals. So what this does is it gives our investors the ability to participate in those types of projects, but they have us, they have our team behind the fund and they reap the benefits of it, but they don't have any of the headaches of it. So it was a nice segue. We also have another fund that is open to anybody. So you do not have to be accredited to go into it. And it's got a very small minimum of $1,000. We have a passion for helping people create wealth and generational wealth. And we don't feel like only accredited investors should be able to do that. And so 4 years ago, we opened up our third fund and that is open to everybody.
Awesome. I have a few questions if you don't mind.
Yep.
So my first one goes back to the notes because I don't fully understand that process. And so I'm sure some of the listeners don't understand a little bit either. So you're saying, let's just say Bob owns a property and there's a lien put on his property now, is it any kind of lien or is it like a tax lien only?
It is a first lien against it. It's not a tax lien. So we lend money to real estate investors. So most of our clients are borrowers, are borrowing money from us to buy the property and rehab it. So we will lend them money, essentially giving them a loan to do what they need to do. And then to secure our loan, we file a lien against the property. So when an individual buys a note from us, they are buying that lien. And that's what secures their money. They're the bank.
So it's kind of like hard money. Same thing, I guess, as private lending. So you're the hard money lender. You lend, you put a lien against the property in case they default or for whatever reason, and then you sell that. That's just so smart. You sell the note to an investor on properties that you have at least 30% equity in.
Yep.
And then they make the monthly interest payments because usually like hard money or private money is like a 12-month for the rehab process, and then once you get your capital back and then the whatever interest payments they've made for that 12, that's so cool. And it typically the interest is what does that look like for a note holder? Like 8%, 9%?
I'd say 8 to 10 is average yields. And we kind of take it a step further. We're a very interesting organization. I call it our organic environment here. So we also service all the notes, because here's one of the things that you hear from a lot of people is, I bought this note from some lender and then I was on my own and I had to collect on it and I don't know what's going on. We don't do that. If we sell the note, we retain the servicing. We actually won't even sell a note unless we can continue servicing the note, because we want that note to perform. And I think there's a lot of bad operators out there that will say, hey, we got a deal, you want to fund it? Great. We got our origination points. Good luck servicing that. That is not who we are. We want that note to perform. So we actually have our own servicing company. We service about 500 notes right now. I actually just got out of my meeting for defaulted. We meet once a week on the whole portfolio because it's important for us.
Yeah.
What we want borrowers to come back to us and borrow from us, but we also want lenders to continue to buy notes. And most of our lenders, when they get paid off on a note, they'll know that they're getting paid off and they'll call us up and say, hey, Heather, I'm getting paid off on that deal out of Texas. Find me another deal. I don't even want my money back. I want to roll it into something else, because they want to keep that money. I joke that the worst time for a note buyer is when they get paid off, because then it's undeployed. It's not working for them.
That's right.
So we service them all.
That's awesome. My second question is obviously, and I don't know the answer to this, like for a long time, in order to invest in like companies like yours, you had to be accredited. Was there a new law that passed? Because I know like Grant Cardone, right? Like for the longest time you had to be accredited, but now like he's buying gigantic complexes and you can invest for as little as like $1,000. Like, did something change to allow that?
So there was some laws changed about 4 years ago, and it gave operators like us, and I don't know the filing for Grant Cardone's funds, but our fund is what's called a Regulation A+ fund.
Yep.
And essentially what that means is the SEC said, okay, unaccredited investors can go into these types of investments, but they do cap you. So they say the most that you can invest is 10% of either your total assets or 10% of your total estimated income. So if you made 100 grand, the most you could invest in one of our funds is 10%. And, it's interesting. Like it's funny to me that the SEC looks at real estate funds as risky, but not the stock market, because you have a tangible asset in a real estate fund. If you invest in a company through the stock market and they go sideways, you have nothing. At least you have real estate backing a real estate fund. So I find it very interesting, but I won't go down that rabbit hole of my opinions.
I agree. I mean, I love the stock market. I invest heavily in REITs.
Yep.
But man, I've like just skills is a stock I invested in a year ago, and I put a sizable amount in and it dropped 93%. I mean, it's like, wow. And then on top of it, through these platforms like Robinhood, you can invest on margin. So like, you invest 50,000, you can borrow another 50,000 on margin. So you can actually lose way more than you have. So it's just, I agree 100%. So I want to segue a little bit into just like the market in general, just because, you're in a great area. Obviously you said Idaho. Idaho reminds me of like Nashville, Texas, like Charlotte, North Carolina. It's just, they're exploding right now. And
our values in this area went up 40% in the last 2 years.
Because it's so beautiful. Look behind you. That's we tell people it's terrible. We're like, there's bears and there's lots of mosquitoes, but nobody's listening. They still keep coming. Once you go to Jackson Hole and you just see that area, it's a part of you for the rest of your life. Like it's amazing. So in markets like yours, because you're all residential, is that correct?
Well, so our funds are diversified. So just for clarification, there are two ways that our funds make money. We take 75% of our fund balance and we lend that money out through the private money loans I mentioned. And that is nationwide. So we are in just about every single state lending the money out. So just for clarification, that's 75% of the portfolio. The other 25% is invested in projects in our local market. So specifically Spokane, Washington, and Coeur d'Alene, Idaho, and Hayden, Idaho. We have, and this is what I was mentioning, we have this massive acquisition team and a contracting crew behind us. It's funny, my husband and I just bid on a triplex here.
Yeah.
And my husband went to the inspection and he was talking to our agent and he's like, where does your wife work? And he told him, he goes, oh, I hate those guys. He goes, we bid against them all the time on properties and we never can buy anything because they have so much horsepower behind them.
That's hilarious.
Yeah, he goes, I didn't know she worked there. And so, I mean, it goes to say that, you can try and do this yourself, or you can invest in a fund that has a team behind them. We have 7 acquisition people that literally just find projects all day. They're calling on out of town home buyers. We go to the auction. We, find distressed sellers. There's all these different strategies that I'm sure you are familiar with.
Yeah.
But we have capital and, we have the ability to move quick, which is typically a benefit when someone's in an urgent situation to sell. We also have our own contracting crew that gets in, rehabs them quickly if we're going to sell them, or even rehabs them so that we can rent them. That is, I will tell you, your question about the market, rental opportunities are huge right now.
Absolutely.
Yeah. And that's really what we've been focusing on. We used to be really focused around fix and flipping single family up to 4 units. But we are finding that because, a lot of locals are selling and making really good money. Now they're displaced and they're needing somewhere to live. Small multifamily is also a huge opportunity right now. We just bought a 22-unit apartment complex in Spokane. So we're kind of venturing out to those things. And you have to adjust with the market, right? Just because 4 years ago, fix and flip was really profitable for us, does not mean that that's always the same strategy now.
That's incredible that you guys adapt like that. And, I agree 100% because even, my wife and I were in this boat where we built our home and the process that it took to build it was a year. Once it was done and we moved in, the values had gone up so much that we're like, Jesus, do we sell the property and make hundreds of thousands of dollars? But where would we go? And, the thought crept in our head. It's like, well, why don't we just rent a place for a little while and let's see what the markets do. And let's see if they go down at all, but we just don't see that happening. But we know a lot of people here that are doing that. They're selling their home, cashing out tons and tons and tons of equity. Yep. And they can't buy a house because it's basically they'd be overpaying for it. So they go so apartments are just exploding, rentals. And I guess they're just playing the waiting game. Is that
that's happening here? I mean, my husband and I did that last spring. We'd lived in our house 10 years and we saw the opportunity. And also we were in the state of Washington wanting to move over to Idaho, and we sold, we're able to buy 5 acres, which over here, 5 acres of land is like, I think on average, they're going for about $450,000 now for 5 acres.
Oh my gosh.
Yeah. But sold, and we're able to pick up 5 acres with a 900 square foot pole barn on it that we converted to a house. But you're exactly right. People are seeing that opportunity and they're going to make more money on their property selling now than they ever will. I don't see, I do see that values have slowed down a little bit. They have not decreased, but they're not escalating like they were 12 months ago. It is taking longer to sell properties. I will tell you, the ones within our portfolio are taking a little bit longer and you're not seeing as much of a bidding war. But I mean, the triplex I mentioned, we were not willing to pay what they were asking. They were getting half of market rents and asking, top dollar. And we're like, no. And the guy's like, too bad. I'll sell this all day long for what I'm asking. And I'm sure he did. So as a real estate investor, I think you just have to be in tune to that, and understand that, for example, with that project, we would have had to evict or raise rents. More than likely, they would have got out because they were paying $700 a month and market rents were $1,600. So,
oh my God,
there's also opportunity with that. You have these landlords that can sell these properties for top dollars, but as an investor, you got to be mindful, hey, this is what it's going to take to get this to cash flow. We're going to have to raise the rents. We may have to evict people, which, takes an act of God right now. So, it's all of that and just working those into your numbers and being willing to walk away from the deal if the numbers don't make sense. It pained me, but I was like, this doesn't pencil. I can't make this work. So
Yeah.
leaving the emotion out of it.
Yeah. And that was going to be my next question is what do you think are the biggest mistakes that investors are making right now? And I'm assuming it's buying emotionally, overpaying for a
Yeah,
property.
overpaying.
That's
Yeah,
like,
and not running the numbers. You have to have that matrix. And that's even with the passive side of investing. I get these people that call and, well, I can get, I can buy a note for 15%. This guy promised me. It's like, okay, first of all, you need to write down your checklist. Like, what do you want to, what are you trying to do? Are you trying to create cash flow or do you want growth? Like that's the first and foremost, because I
yep.
get these people, they get so hung up on rates of return. And it's like, but what are you trying to accomplish? So one, figuring out what that strategy is and what's your box? Like, will you invest in anything or do you specifically want to stay in a location? What is, your qualifications for a borrower? If you're buying notes, do they have to have experience? Because people get analysis paralysis. I get these people that have talked to 20 operators. They don't even know what they're trying to accomplish. So I think it bodes to both being a passive investor and a active investor. Like, what are you trying to accomplish? And then what does your box look like? And if it doesn't fit the box, you got to be willing to walk away. We lost a $700 inspection fee, but the numbers weren't there,
Right.
And
Right.
if you get too emotional about it and, well, if I don't take this opportunity, well, and there's always opportunities. You just got to find the right deals.
Gotcha. And that's something that obviously it's just, you got to put in the work, I'm assuming, right? Like you
Yeah.
have a team of people doing the things that most people wouldn't do, which is calling on homeowners. Cause I mean, when you have cities where hedge funds are just coming in and they're just gobbling up everything,
Yep.
but most of them don't have boots on the ground. They're just, going through real estate agents, but they don't have
Yeah.
boots on the ground, calling homeowners, looking for distressed sellers and things like that. So that's so cool that, you guys are willing to, I feel like you're like everyone I know from Utah, Idaho, like just that whole area, they're the greatest salespeople like on the planet. And they're willing to do whatever it takes to win. I can't tell you how many people I know that went to like Brigham Young University. They're just from that area. They're so successful. Like they're just willing to do the work that nobody's willing to do. And they're happy doing it. They crush. Like, I just think that's so awesome. So where do you feel that with everything changing, interest rates going up, like where do you feel like the most opportunities in real estate lie in the next like 5 to 10 years? Like just your opinion.
Yeah. I think the rental market's going to be huge and small multifamily for sure.
Got it.
We were just talking about, I don't know if you read the Kiplinger letter. But
I do sometimes.
Yeah. So they send that out every week and they were just talking about hedging inflation through real estate trusts, which is exactly what we manage. The best place you could be is in real estate in an inflationary period. And, like you said, these companies and we're one of them. Like we have a massive team behind us. So to try to do this as an individual is very difficult unless this is your full-time gig and you're an agent and you've got insider information on deals coming up. And what we find is because we also have an education component to our company. We teach people how to be active real estate investors. And what's interesting is more often than not, they'll go through the program and realize it's a lot of work. Like, I don't want to work that hard. And then they become educated about our real estate funds. And they're like, well, why would I deal with tenants and toilets and subcontractors when I could actually just deploy capital in a passive environment? You mentioned you're active with real estate REITs. This is the same thing. They're just not publicly traded. And so more often than not, you'll see a lot of those clients just segue over. They'll try it. They'll try, making offers, managing a rehab project, and then they realize that, investing in the funds is just a more passive, easier route. But I would say that I think definitely the multifamily space is going to be very profitable. I think rentals, even if it's a single family, there's still a lot of opportunity. I don't know that there's as much profitability in the fix and flip space right now because prices are just so high. And then you have issues with getting materials. You can't get anything in stock. I think it just would be very difficult for a one-off guy just to do that and make really good money at it. I think focusing more on multifamily and then also rental opportunities is where it's heading. And
Awesome.
as rates raise, the affordability, most people can't afford to buy a house for the dollars that they could have a year ago with rates being low. So you're going to see more of those people transition into rentals.
That makes sense. Do you have an opinion one way or another on commercial real estate? I mean, I know it's not your active lane, but like, what do you?
We're just starting to dive into that. So when I came on board 10 years ago, we were residential up to 4 units. That's all we did. And we decided as a team, like we weren't going to try to be that lender. We weren't going to do everything for everybody, right? We're starting to dip our toes into it, but probably when I see commercial, I'm talking more multifamily, not retail.
Got it.
But what we're seeing here in our local market, because if you're familiar with downtown Coeur d'Alene, there's a lot of old residential houses. We're seeing a lot of them being torn down, and they are putting retail with residential above them. So mixed use. Yeah.
That's super cool. Yeah. We invest in short-term rentals, usually cabin, lake, or beach. That's what we focus on. But similar thing is happening. Like we're really looking at like Bar Harbor, Maine area. Just love it. And they're doing a lot of that as well. It's like the most beautiful properties, like the ocean views you could ever imagine, with just the crappiest property you've ever seen on it, like 150 years old. And they're doing the same thing. They're putting like mixing residential with commercial use. I'm glad they're doing that, but it's just so cool, like to see that. I didn't know one way or another whether you had an opinion like office space, things like that, just because kind of scary, like the work from home makes.
And that's where we're seeing a lot of people move to our area is, COVID happened and these companies, out of necessity allowed people to work remotely. And now they're realizing, well, everybody doesn't really have to come into the office, and it's a huge expense. And I think that's a big influx of people coming here is they still work, they just work remote.
Right.
They're moving from Seattle and California. They're getting out of the big cities. So I don't have enough experience in the commercial space, but I can tell you what I see here. And I don't think that it's completely necessary. The building that our company is in, we own the first 3 commercial floors, and then everything above us is condos.
Oh, wow.
Yeah. Yep. There's like 3 or 4 buildings next to us that are the same thing. It's like, you can see the view from us. That's the view we have. And then everything above the 3rd floor is all condo residential space.
That's awesome. Wow. So I have just a couple more quick questions. The first one is, can you mention that you guys have like an education platform? I was not aware of that. I was hoping, like, can you explain a little bit more about like what you do and what you offer for people? Absolutely. As far as like, I'm a new guy, I stumble upon your company. I would love to just learn, like, what would I do? So
we've got the education component. So that is really focused around clients that want to be active real estate investors or active brokers. So people that want to be a loan broker, specifically in the private money space, not a licensed mortgage broker, but someone that wants to work with investors that are looking for funding. The active investor that wants to go buy the house, fix and flip it, sell it, rent it. We have programs that teach them how to find the deals, how to write an offer. I mean, it's as elementary as someone that doesn't know any of that up to the guy that knows how to find the deal but wants to rehab it. We'll teach them how to put a bid together, how to manage contractors, all of those things. So it is a series of events. And what's interesting is we used to put them on live. And so we would go out all over the United States. We'd put maybe 2 to 3 of them on a month. Now with COVID, we are now virtual and we put on 2 to 3 a week now. So it's so they can always visit our website at the Lee Arnold System of Real Estate, and all of our events are on there. We actually have what's called a funding tour. It's kind of the first introduction to us, and you don't pay anything to attend it. So it's a really good opportunity to see if it's even the path that you want to explore and go down.
Yeah, because I know for me personally, like I've always wanted, me and my wife, we've always wanted to like do some hard money lending, but Like me, I'm just like, wow, how do I run the math on a deal and calculate the ARV, like all of
Yeah.
that stuff to where I feel confident knowing that one way or the other, like it's going to work for me. And that's always been my biggest fear because I don't know how to just do that for like
Yeah.
residential properties. And so the Lee Arnold system, like it will teach a lot of that stuff.
It
Correct?
teaches a lot of that. And then also getting into my system, because I put on tons of webinars about that. Because when we sell our notes, we give our investors the entire due diligence package. So we show them, here's the appraisal, here's the due diligence we did on the borrower, here's how we calculated the ARV, because that's the key to buying notes and lending your own money is really, what is my risk, right? Like,
Sure.
what is that property worth and how qualified is this borrower? Those are the two things you have to determine. And a lot of times with private money, one is better than the other, right? Like, I always joke, it's storybook lending. Like, what's the story? What's this borrower's story? How are they going to successfully get in and out of this loan? And what truly is my asset if I have to take it back? And those are the two things you really have to determine. We put that together in a pretty package with a bow on it. So you don't have to have the headaches of that.
Yeah.
And I've heard nightmares. I get calls all the time from my guys. Hey, sorry, I got greedy. I met this guy at this meeting and said he'd pay me 15% and now he's not paying. And it's like, oh my God, why? I told you. Like, these are the things. So I put on a lot of presentations about that, just due diligence. Or if you don't want the headache of it, buy a note and we put it together with a big bow on it. Or put your money in the fund. Like, it's like I said, you got to decide how risk adverse you are, what you're trying to accomplish, and so if they go to our website, it's Secured Investment Corp. They can register and they'll just be on our mailing list. They'll get invited to all the webinars that we do. We put on tons of webinars, and again, educating people. I'm an educator. I'm not going to give you financial advice, but at least educate you to keep you out of trouble and not get into a bind with doing something like that without doing your due diligence.
That's so awesome that you guys do that. My final question is, for a newbie investor, if you were your own first-time investor coming to your company, what would be the first thing you would invest in? Would it be a note or would you do
The
something
fund.
else? The fund.
I would do the fund.
Is that the Circle of Wealth fund?
Yep, I would invest in the Circle of Wealth Fund, dip your toes in that. One of the things that we love to educate people about is using your IRAs or 401ks. I don't know if you're familiar with that, but there is opportunity to roll those accounts over. So if you have an old 401k that you had from a previous employer,
Yep.
you can actually roll those accounts over to a self-directed custodian. So then you don't have any tax implications. It's still tax deferred, and you can invest in the fund with that. And you determine where you want to invest in it. You're not paying a financial advisor to
Sure.
educate you about that. So I would say invest in the fund. I would say set up any tax deferred accounts you can. You can set up health savings accounts with self-directed custodians, college accounts for your kids, Roths, traditional. So I would say get active with that and invest in the fund first, because the notes are the risk. If you're looking at risk adverse, options, the risk with a note is your borrower might not make their payments. So as a lender and a note owner, you would have to be able to front cost for foreclosures. If they're not making their payments, they're probably not keeping their insurance current or their taxes. So those are other hard costs that might be incurred. Ultimately, with a 30% equity, you're going to be fine.
Yep.
But if someone's going and investing, if they only have $30,000 and they put that all in a note and then their guy doesn't pay, there are some costs incurred with that. So I would say the fund is a better option to get started with.
Awesome. I love it. And for anybody that wants to follow your content, everything, the best place for them to go is securedinvestmentcorp.com.
Yes. Yep.
Awesome.
Visit our website. We give 15-minute consultations with myself and 2 other team members. They can just put their info in and we'll set up an appointment, and we'd love to, again, educate them. And if it's a good option for them or they have additional questions, we can always get farther in the weeds with those kind of conversations.
Dude, that's amazing. I love it. Heather, thank you so much for your time, for being you shared a lot. I mean, in 40 minutes, you crushed this. So thank you for your time. I will put all of the links in the show notes, and for you guys listening, take advantage of that. Oh my God. Seriously, take advantage of that. There's not a lot of places really where you can just be extremely passive and expect 8, 10, 12%
Mm-hmm.
return on investment. Very few stocks will ever do that. Even I'm invested heavily in REITs. They're getting, a lot of them are getting battered right now. So
Yeah.
yeah, I'm still getting a great dividend, but the principle of it is just gone down quite a bit. And I'm sure, they'll rebound, but it's just like,
Right.
you can prevent a lot of that roller coaster. So thank you so much for your time.
Thank
And
you for having me.
yes, of course. Thank you. Thank you.